Let's talk about why the lawsuit and the news has not affected the price action of XRP at all, and that this all was very technical for the last year. I'm going to play you guys some clips from the video from July that's still on my page. They'll get merged into the analysis, but yeah, we've been looking at the structure for a while, so let's just cover what we do know. We are looking at XRP as an overall structure. It's consolidation here. It does look a lot like a descending triangle. One could look at it like so, right? And we know that we have time for the high here and the lows perfectly. Looking for, it looks like May 16th, and I think I have another one for May 30th. So we are looking for resolution on this sometime in the next coming week. So this is a very important time for XRP. And it's going to be very important for us to know what is going to be the most important levels to watch. This little section of the chart right here is obviously 57.952 and 62.062. That is going to be the area on the chart that you're wanting to keep an eye on. You start closing below that and you have some problems. You are then looking down, right? And from there, we are probably just looking down to like, the overall range on this says that we can go as low as 19 cents. I prefer to use leverage exchange data from Bybit because that's where I prefer to trade it. I just think it has better volume. And I think you get a little bit different outlook. I think we're getting around 29 cents. And so if we watch back the video, that's kind of what we were talking about, is 29 cents could be a major target. I do think there's some levels in between to know about. I think 47 cents is on the table. If we turn on some of these NPOCs here, you will see that, well, some of these do matter. They are important, but you will find that, well, they do line up nicely with some of our targets as well. So 47 cents, if that level is lost, is kind of like a hopium level, and then 27 or 29 in this instance. Then we're looking down to that 19 and so forth. But we don't want to get too far ahead of ourselves. We just want to make sure that we're prepared. In that video, I gave you guys these levels. 86 cents is a pretty key level. Ideally, I would really like to see $1.03 reclaimed. And if you reclaim $1.03, I do think that you'll head back to this $1.35 level. Come back and you've back tested 2020. So you're looking at a mini range right here between about 50 cents and 86 cents. Ideally, you want to be above this $1.03 because your yearly VWAP is coming in that range. You really want to be above that. There's an anchored VWAP from all the price action dating back to April 2019 coming in that region. But losing 50 cents, guys, is pretty much telling you where you're headed. You're heading to 29 cents after that. That's where you want to be accumulating and taking a look at price action and saying, is there evidence of accumulation? Are whales really buying? Can I expect appreciation? Okay, so we talked about just these levels right here. We talked about $1.35 after bouncing from the 50-cent region. We said it would go to $1.35. Then we said we need to keep an eye on 86 cents. And you can see this is 86 cents right here, getting rejected. Okay, these do line up with the levels that you guys were looking at as well in my previous analysis, just from like local day trading. If you guys recall, you guys were looking at these levels, particularly I believe it was here at 88 cents is what we were calling it, but still we're really splitting hairs at that point. And then $1.09 is going to be pretty important. And I think that we had $1.33 marked off as the area that we wanted to watch. I'd have to find it. There's just too many to keep up with, but 88 cents is the key level. And then we're looking for downside here. I think we were talking about turning on right here, and we were saying that really don't want to be losing that 66.4 cent region. You can extend that a little bit below, because obviously you can come below the range. What I would say to keep an eye on is that you had a very clear failure to, take the price lower right here, 57.7 cents. If that level begins to be, lost, and you're being extra conservative and careful here, that is when you can start realizing these targets down below, but not until then. But yeah, I just wanted to let you guys know that this has actually been an extremely technical trading coin. Trade the ranges, guys. If you're unsure how to do that, link is in the bio to the group. But I honestly came across this video, and I remember the comments were just so atrocious, and people just, were calling me stupid. I don't know anything. It took about 5 months there from the end of July, 9 months for me to remember to come back to this and kind of let them know, that this has all played out almost to a T. Off by about 6 cents on the high there, but whatever, that's okay. But these are the levels that matter the most. And I can tell you that even though this is a bearish structure, because it's, higher or flat bottom of support and then lower highs, patterns are fallible, in my opinion, and can break to the opposite direction. So let's say that you wanted a bullish case scenario. I will point out that all of your high time frame averages, okay? So this is going to be something that, we talk about in the group a lot. I call these key levels. Now you were beneath every single key level on the chart, all the way up to $1.06, and they start at 92 cents, which is, you know, we said 86 cents or 88 cents. So really that little like 4-cent window. You know, if you get above this box right here, this is really good support. You know, that would be and constitute me to become pretty bullish and think that this is going to re-challenge the highs, or at least hit that 157 NPOC. That's what, you know, what starts that move is that move above 88 cents or 86 cents, however you want to look at it. You know, I think if we get back that high at that point, this is a nice double bottom and off you go, right? So we are remaining neutral because this does technically, according to Fibonacci time, have a little bit of time left in it, but maybe that fib time is just a macro low and not the actual breakout. So could it do this? Absolutely, but it can definitely do this, guys, and be ready for that if it does, because structure does support it. But, you know, as the comments alluded to, you know, us chart guys, we don't know anything. But that said, I'm going to tag every single one of you guys in this video because I am bored on a Tuesday and pretty petty. But I hope you guys enjoy the video. Do me a favor, follow, like, comment, share, and I will catch you guys in the next update. Trade safe.